Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Varilek. Grains to the plus side today, and we're leaning higher in a lot of the livestock futures. Feeders would probably be the exception right now. And Brad, let's talk about risk on today. It feels like that's going to help out the grain sector, corn market here. Do you think how much can we recover?
On the corn market, you mean?
Yeah.
Well, I think one of the things, way back when I was just a pup, somebody said to me, spreads, basis, then the market. That would be a grain mantra from the old school way of looking at it. And when you mention basis, or when I talk about that, that has to be the top of the pile here for me this morning. Basis levels continue to strengthen. This is in the Northwest Iowa area where I sit. We are now 60 over at most of these local elevators, 60 over. We were like 42 over like 3 weeks ago. It's difficult for me to see how they're going to break this old crop corn old crop corn futures very much with the basis this strong. Now, we do at the end of the month, of course, have a couple of reports. 2013, that report was very, very bearish, coming off of the 2012 drought. We expected to plant a lot of corn acres, just like I expect this year as well. But I guess we'll cross that bridge when we get there. But to me, the old crop corn seems to be in a little better hands here, given the fact that you got pretty good exports too. Again, a little bit of that blush again this morning to China, but it takes a lot of good news to get it to 2 cents higher. Huh?
Yeah, another 5.4 million bushels to China this morning. That makes over 88 million over the last 5-6 sessions here. And so exports are improving. And is that the key here for keeping this market, this old crop market going here, is that we've got to get the exports to improve because, domestic demand, like you say on the feed side, has still been decent.
Feed side decent, ethanol not so much.
Not so much, yeah.
The crude oil, that price, it's critical that the exports stay like this, and one could certainly see that. When you had that story last week floating around that we had a positive case of African swine fever in the U.S., that was certainly good for 5 or 6 of that dollar down deal that we had last week when they started to panic. Because if you lose that export side of the market, 25% of the hogs we raise roughly go to exports. So it's critical. Now, I don't know, we just mentioned China in the corn mix. The fact that they're buying so much feed makes me wonder if maybe their hog herd is maybe in better shape than they're letting on, which might be a bit of a problem here in terms of pork exports moving forward. We'll have to keep a close eye on them.
And we do know the funds have liquidated a lot of their long position in this corn market now. So certainly that's going to help that market recover too, isn't it?
We should be, you would think, you're through that where they shook the trees and whatever is going to fall out is done. I would think, plus, around the $6 level on the corn, I would think there'd be some interest in terms of the end user even here to take a look. But so I would expect we're going to try to get a little better from here for sure.
And we'll see what we can do in terms of how soon we can get in the field to plant, what the acreage mix is going to be like here in another week when we get the report out. Soybeans, okay, we bounced off of key support yesterday. So again, do you think we'll get back over the $15 mark here in the old crop?
Oh boy, I've been accused of being the Mr. Debbie Downer on the bean deal. I'm not very optimistic on the beans. I don't think you've got the same kind of fundamentals on the beans that you do in the corn. Not that I'm super bearish old crop beans. It's just that I just don't see quite the tightness of supply like you do in the corn. And what I worry about is the overshadowing of what, by all accounts is a record crop in South America, in Brazil particularly. So, as they exchange their place in the world market and take over basically the export picture, I would be concerned. You talked about late spring. I've been hearing a little bit of that chatter. Why we worry about things way too soon, as farmers do. But that might be potentially a little bit negative to the new crop beans as well. I'm very cautionary to the grain guys around here to get work done on new crop corn and beans, but especially on the beans.
Okay. So the cattle market, let's move over there. We're starting to see that market leak just a little bit as you and I talk, and feeders understandable with the higher corn, but live cattle have been pretty beat up here. We had new lows for the move yesterday. Do you think the selling pressure is done here because funds have liquidated here on these macroeconomic concerns? And I'm not sure those are all over, especially with the Fed meeting tomorrow.
No, you're right. That should be an interesting meeting tomorrow. One of these times, we're going to have this Fed meeting where they tell us all that they're going to raise the rates, and then they decide not to. I can't wait for that. I don't know that that's going to be tomorrow. Probably not. Um, but some of that macro stuff last week certainly was impactful on our markets. Cattle hate that uncertainty kind of news, of course. Seems to be a little quieter for the moment in terms of banks and all this other trouble that's gone on with them. But I was encouraged by the fact that the I should finish that question. So open interest is off by what, 35,000. April's open interest is well below the third option, August. That's usually kind of okay, it's safe to go back in the water kind of a signal, at least to me. So I guess I think especially on the front end of the market, and particularly when the front month is discounted to cash, I was encouraged that here, at least, the cash market actually improved as we went toward the end of the week, with bids getting as good as 165 again. I can tell you the mood around here, the yearling crop is all but cleaned up. The show lists are very, very small. And here, guys are saying, well, why would I take less? The cattle don't make money here at 165. And there isn't anything behind this set of cattle here. And these calves are nowhere near fat. I think there's maybe a little more bow in the neck and a little more resolve on the part of the feedlot this week, that I think there's a decent shot we could get higher money this week.
Well, hopefully that'll pull the futures. That was kind of the key here recently, was the cash was the leader here of the futures. But we have other fundamentals that are very good in terms of, when you look at the weights, they're down. That certainly bodes to the fact that we're current, and the number situation was confirmed in that cattle on feed report, wasn't it? The tight numbers.
Well said. I couldn't agree more. And maybe even to reiterate that, average carcass weight's about 20 pounds under a year ago. 20 carcass. Okay, so we've all gone through these deals where we're the opposite, where we're backed up. We didn't get cattle sold on a timely basis, and we keep thinking, how many of these cattle do? If we could just sell a lot of cattle for 2 weeks or maybe a month, maybe we'd be through them. And it takes forever. It's the same way when you're this current. I contend that we've been pulled ahead 30 days since the springtime, since corn got high. And so when you're that current, that gives you the opportunity to have some leverage. You can pass bids if you want to. And now that we're at the end of this yearling crop, and because the weather's been so tough, these big calves that came early, they're not going to be ready in April. I just feel like being this current, and with the cost of gain this high, and weather's still a problem where I live, that guys are they just want the cattle dead, and they want them out of the way, and that's a good sign. And I think with the discount structure in the market now that the futures have, that's also a better sign. The market's telling you it's going to get worse. What I expect is that the cash market's actually going to handle itself better than maybe the futures. We've had years where, in say the 1st of May, cash is 8 or 10 over the June board. I wouldn't be at all surprised that we could do that again. But that's okay. That's positive. That'll keep us pulling cattle forward.
Are the fears founded that if we have a recession, or if we're going into bank crisis mode, or whatever it might be, that demand is going to fall apart on the beef side, or not?
I can't answer no to that, but it's been something that the market's been concerned about for months, years, maybe even already.
But we haven't seen evidence of it yet.
Not at all. In fact, demand seems to be as good as it's ever, maybe better than it's ever been. I want to be respectful of something that really a black swan type of economic event. But to me, the way I look at the demand of beef, it's not, you don't throw it away. How much can you sell at how high a price? Beef production, we're not to our tight numbers yet. Beef production's been big. And yet we continue to be able to sell it at a very, very high price. The last cattle on feed report, we got way more cattle on feed than we did in 2014. We're doing pretty good, I'd say.
Hog market just imploded last week. We had follow through selling yesterday. We're trying to recover today. Are we anywhere close to a bottom in that market? And was this pullback justified fundamentally?
That ASF scare didn't help the cause. That cost us, I think, $5-6. There was some talk that there was a positive case, which turned out not to be, apparently, but reminded the market just how fragile that is. I really think the hog thing, the biggest problem is to use your phrase, money flow, or the guys that are long are stuck and in trouble, and it seems like this market's taken on the personality of the old pork belly market, in that they're just relentless and like sharks in the water. I can't imagine that June hogs are going to be at 92 cents when we get to June. I do not believe they're going to be. I think they'll be a lot higher than that. I don't understand why April has to be trading at a discount to cash, but and until you've purged whoever, can't write the check to make the margin, until you've purged that, maybe it's today. I would like to think maybe we're close here.
Let's hope. Thanks so much for joining us, Brad Kooima with Kooima Varilek and Markets Now.